Welcome, everybody. Let's spend some time talking about GDP. GDP stands for your gross domestic product, and it is a total monetary value of all the goods and services produced basically within our country. And the exact calculation does take in effect exports and imports. So the actual calculation for GDP, it kind of comes out in a percentage when we hear it a lot of times, is C plus I plus G plus X in a bracket minus M in a bracket, okay? And C is consumer spending, I is business investment, and G is government spending. Those are the three that are added together, and they are subtracted by exports and imports, okay? That's the X and the M. So from that, you get a calculation, and that calculation represents the economic growth in our country in particular. Now, there are there's actually four main types of GDP: nominal GDP, real GDP, and GDP per capita, and purchasing power GDP. I like GDP per capita because that one divides the population and you can understand the economic advantage of per person. So it's kind of it gets a little bit more personalized. Now, GDP comes out quarterly and annually for us, and its effect on the market is what I really want you guys to understand. So in a bull market, which we are, I don't know, we're kind of teetering, I feel like. Donald Trump is slowing us up with these tariffs. Last time he was in president, we definitely got on a bull market, but I don't quite feel like we're there yet. We're kind of still in a more volatile state. And if you want to know the volatility, you look up the VIX index. If it's up green, that means we're volatile. If it's low, it means we're not volatile. So we're kind of in a teetering state. But when we have strong GDP growth, okay, that kind of puts us in a bull market. And in a bull market, the sectors that you should focus on are consumer discretionary, financial, and industry. They tend to perform well because they are producing things, and they are also consumer discretion, which is also your ability and want to be spending. When we have low or steady or negative GDP growth, that is an indicator of a bear market. And the stocks that suffer are retail, real estate, and secular business industries. So those are kind of things that kind of go in a loop. They tend to go a little bit slower in those times. So right now in our high inflationary, right, the feds, they have the opportunity. They are the ones that calculate the GDP, and then they have the opportunity to control inflation. Because when there is inflation, the stocks that are at risk are our tech stocks, mainly because they are the ones that borrow the most money. And when the feds are increasing the interest rate because of the GDP, then the tech stocks are unable to purchase and borrow more money, because that's really how they work. They borrow money. So that is a little bit about how the feds literally take in the GDP, and how they are we'll say the puppet masters in terms of releasing funds into our economy. Okay, so the GDP has less to do about, yes, it has to do with you working as a person, and it's always good to kind of know your state's GDP, just how you fall in terms of the rest of the states. But as an intelligent investor, you want to know basically, is the GDP rising or is the GDP decreasing? Either way, you have an opportunity to invest. Okay, either way, there's an opportunity for you. It's just about which things you're going to invest in. So if an expanding GDP, that means that it's a growth GDP. And so tech is a good stocks, consumer goods, financials good. If things are slowing, okay, so shift to defensive stocks. One thing I want to make a caveat about is that when somebody, help me and do a little history. But it tends to feel like when the Democrats are in the administration, we muddle in a lot of war. We definitely had a lot of war a lot of war headlines. And I think that that is a agent of boosting the economy. You guys do know that, right? War boosts our economy because we have so much money. I mean, out of the pie of our taxes, a huge chunk of it, probably 70-80% of it goes to military defense. So I feel like the Democrats, since they normally bring on a bear market, and that normally slows GDP. So investors shift to a defensive stocks such as utilities, healthcare, consumer staples. And in a recession, that's also when GDP reaches down to a certain level, it's actually an indicator of a recession. What you should be invested in a recession is bonds, gold, and high dividend paying stocks, right? Because you'll need the money. So just a little caveat, the fourth quarter of 2024, we actually saw we expanded our GDP. 3.1 is our growth. And for the year, our GDP increased 2.8%. Okay. So our GDP is inching up slowly, right? So I don't think that's why I do think we'll get to that bull market soon. So think about investing in tech, think about investing in things that are going to be propelling your portfolio. Okay. So that's just some knowledge about GDP. Look at your state's GDP, understand kind of where you fall, understand what stocks you're going to want to be investing in as things are going to be ramping up. This is just my prediction. Let me know what you think. As always, leave a comment, follow, share. Thank you.